Hello, everyone. Welcome to Follow the Money, brought to you by Nairametrics. My name is Ugodre, and we do this every week on this channel. If you are not subscribed yet, my guys say to tell you to subscribe and follow our channel for more interesting coverage of the Nigerian economy, market, and business. If you're not following Nairametrics TV, then how are you creating wealth through information? Because that's what we do here. What a week it was for the stock market. The Nigerian stock market closed, guess what? 10 consecutive weeks in the green. 10 positive weeks of returns for the Nigerian stock market. The all-share index gained 6,810 points to close at an all-time high of 141,263.05 points. That's like the highest we've ever seen the stock market achieve in terms of points. I still remember on the show we talked about the stock market breaking that 100,000 points barrier. But now is at 141,000. It is at an all-time high. And what is stopping this stock market? I don't know. It is just flying. The market gained a whopping 5%, 5.06% to be specific, last week. July, we thought was like the best ever month. But August looks like it's looking pretty good. Market capitalization close to that 90 trillion marker at 89.3 trillion. And so it looks like we're going to be seeing 100 trillion naira stock market anytime soon. Hey, we're currently at 89 trillion, still a long way to go, about 11 or so trillion to go. But man, just imagine if Dangote Refinery lists tomorrow, then we're at 100 trillion already. So don't bet on against the market hitting 100 trillion by the end of this year or early next year. But looks like we're getting ever closer to it. In terms of volume traded, 4.8 billion shares were traded, last week compared to 3.6 billion the week before. So what does that mean? That basically means you got a lot more investors buying a lot more shares compared to the week before, which is good. So when you have investors buying more shares and the value of those shares are going up, then that means it's a buying frenzy. Yeah. In terms of gainers, we had 54 gainers during the week. We did have losers as well, 49 decliners, while about 43 stocks remained unchanged. So great week for the market. So let's look at segments as well. And industrial goods segment gained 10.12%, and that was led by Dangote Cement, Better Glass, and Lafarge. And the banking index also did 3.49%, led by Wema Bank. Wema Bank, one of my favorite banking stocks, gained 20% during the week. EcoBank and FCMB also joined the strong gainer. Look, man, it's almost like I'm running out of buy list. Like stocks are flying. I had said in my FTM blog, in case you're not aware of FTM, ftm.ng, if you're looking for my own insights on what stock to buy, sell, or hold, my own recommendations, you want to try ftm.ng. Of course, buyer beware. You got to always do your own analysis, do your own research. But, that just supports some of the things, some of my views. And always welcome to, your own views as well. If you don't like any of the stocks that I have maybe recommended, you can always let me know as well. On any of the social channels that you follow me on. Right. So consumer goods stocks, 2.7% gain with UACN standout performer. I have some story on UACN I'm going to talk about later. In terms of oil and gas stocks, did it a little bit worse, 0.48%, while the insurance sector also dropped 1.22%. So oil and gas stocks dropped 0.48%, just basically flat. You know what I mean? And so I'm going to be talking about other corporate news as well. We had some major earnings from Unilever, Dangote Sugars, Wema Bank, like I mentioned earlier. First Holdco also released their numbers to become the first first bank, no pun intended, to release its results, its Q2 numbers. Nigerian Breweries also dropped numbers, EcoBank as well. GTCO also officially delisted its GDR from the London Stock Exchange, making way for the bank being the first Nigerian bank to list on the London Stock Exchange. So with stocks crossing that 140,000 barrier And heavyweight stocks still rallying. It kind of looks like it's all the way up. I mean, but let's see how this week pans out. Are we going to see some drawbacks? I don't know, but it looks like investors are still piling a lot of money into the stock market. We did an analysis on Nairametrics last week, and we found out that a lot of the smart money, whether it's money from mutual funds, pension funds, a lot of these collective funds, still go mostly to money market funds. So you're not even seeing that full smart money go into the stock market yet. Like in total, when I even set up to 100 billion, maybe just slightly less than 100 billion naira going into the stock market from all these funds. So think about it. All the collective funds, mutual funds, pension funds, add them together, the amount of money that they are allocating to the stock market in terms of, well, not pension funds, I beg your pardon. So let's just look at the mutual funds, only mutual funds, and some of the more diversified funds. You add them together, it's about 100 billion naira in terms of investments. And then pension funds also have a significant amount there. But you have the stock market at hitting 89 trillion. So there's still room for prices to probably go up. All right, so we go right into news, the results that were out. It's the earning blitz, like I like to call it, on Follow the Money. And if you're a consumer goods person, this episode is for you. There were a number of results that came out. Unilever post 225% profit growth and declared, guess what? Its first ever dividend, interim dividend, I beg your pardon, in 20 years. Remarkable stuff. The company reported a very strong half-year results for the period ended June 30, 2025, recording a 54% increase in turnover to 98.1 billion, up from 63.9 billion the same period last year. Operating profit at 18.8 billion, up 444%, like almost five-fold increase, and net profit up 14.4 billion, up 225% to 14.4 billion. And the numbers were so good. Unilever board declared interim dividend of 50 kobo per share, which will total about 2.87 billion. And that, my friends, is Unilever's first ever interim dividend in 20 years. The CEO, of course, Toby Adeni, credit the performance to the disciplined execution of the company's growth action plan, GAP, operational efficiency, and strong brand focus. You know, like when they speak all this grammar like this, they're just basically telling you that, man, they put a lot of sweat, a lot of work into it. And so Unilever numbers, very solid. So if you're a Unilever shareholder, you should be happy. There is dividend coming, interim dividend, that is. And the next stock, of course, is Nigerian Breweries. Nigerian Breweries also released its Q2 numbers, and it was a stellar turnaround. It's like a turnaround game everywhere. They reported a pre-tax profit of 43.87 billion in 3 months. Yeah, 43.87 billion. And that essentially reversed the loss that it had the same period last year. Remember, the same period last year, Nigerian Breweries was reeling in losses, mostly induced by FX. And they recorded a 33 billion loss in this same period last year. And now they are for 3.87 billion. So that basically has taken its half-year pre-tax profit to 88.4 billion naira, compared to 85 billion naira lost the year before. So it's only just taken Nigerian Breweries 1 year to achieve this massive turnaround. Impressive stuff. In terms of revenue, Nigerian Breweries revenue is up 54% to 738.1 billion naira. Are you guys drinking that much beer? Like, everybody seems to be drinking a lot of beer. I don't know what's happening. Somebody said maybe it's depression. Maybe we're all depressed, and so people are drinking more. I don't want to believe that, but it appears the marketing, strategy for these guys is working pretty well. They have increased prices, by the way, but it looks like they're also pushing volumes. So even though you would say that this revenue increase is more driven by prices, but the fact that you're seeing a 54% year-on-year increase to 738 billion is just whopping for Nigerian breweries. Nigerians seem to be drinking a lot of beer. Operating profit up 418% to 66.6 billion. And guess what? The Achilles heel for the bank, finance cost, also down by 87%, mostly due to debt restructuring post their right issue. So solid numbers for Nigerian Breweries. Nigerian Breweries is now a company with a total asset of 1.1 trillion. So they're in a trillion club in terms of total assets, and retained losses also now at 82 billion. So what that means is by the time we get to the end of the year, it's pretty likely that Nigerian Breweries would have wiped out that losses that stopped it from paying dividend last year. Wow, that's some good stuff there. So because if its retained loss is, or accumulated losses at 88 billion, and it already did 88 billion the first half of the year, just a coincidence, then you suspect that by the end of this year, it should have wiped this out. And that company may just pay a little bit of dividend. I won't be surprised if they don't pay dividend. I won't be surprised if they don't pay dividend at the end of this year. And we'll move on to Cadbury. Cadbury is another company as well that also suffered losses last year because of the exchange rate unification and the devaluation that came with it. But Cadbury post 5.9 billion in Q2 profit. That's second quarter profit alone. And that basically took his half-year pre-tax profit to 14.5 billion, also reversing the 30.8 billion loss he did the year before. This is the year that the profits essentially gobble up the losses. So the year of the losses is gone. We're ushering in the year of profits. It's just incredible stuff. And revenue was also up 50.17% to 77.2 billion for the half year. And of course, Q2 revenue was 40 billion. So in the 72 billion that they made in the first half of 2025, that is January to June, April to June was 40 billion. So they even did better, up 44% compared to the year before. And gross profit, 9.7 billion, more than double last year. So solid numbers for Cadbury. Cadbury's total asset is now 87.4 billion. They still have a loss of 27 billion to go, but that number has dropped. It was a retained loss of 37 billion as at December last year, but that retained loss has now fallen by about 10 billion to 27 billion. Still a long way to go. I kind of think that they might also wipe out that retained loss by the end of this year, which will effectively make Cadbury a potential dividend paying stock by 2026. So looks like a lot of good things happening to Cadbury. And by the way, Cadbury has been one of the best performing stocks on the exchange, up to 30% to 70.9 naira per share. Wow, I still remember Cadbury at 20 something naira per share about a year ago. So the stock is up by about 3 times that price. All right, so we move on to Nestle. Nestle is another competitor of Cadbury. And what has happened to Nestle? Nestle also recorded a lot of losses last year, if you recall. But like I said, it is the year of the profits. The profits are back. Zombie losses are gone. So Nestle also posted massive turnaround in the second quarter. Pre-tax profit, 37.2 billion. Reversing the 56.4 billion loss it recorded the same period last year. Again, between April and June, Nestle reported a pre-tax profit of 37.2 billion compared to a loss of 56.4 billion the same period last year. Now, if you add up Q1 and Q2 profits for Nestle, pre-tax profit is at 88.3 billion. Now, think about it. Nestle recorded a loss. This time last year, we were talking about Nestle recording a loss of 252 billion naira. But now, it's at 88.3 billion. Revenue, 581 billion in 6 months alone. In 3 months, it was just 286 billion. So things are looking pretty good for Nestle shareholders as well. Solid numbers for Nestle. Nigerians eating a lot of chocolates. So it looks like Nigerians are eating a lot of chocolates and drinking a lot of beer. Is that how you guys are going through this very tough economy? Because, I mean, it's reflecting in their numbers. So lots of beer, lots of chocolate. And what else are we doing? I guess we'll find out at some point. But in terms of sales mix, Nestle makes most of its money domestically, of course, in Nigeria. Out of the 581 billion in revenue, 577 billion of that number was made in Nigeria, while 3.4 billion in Ghana. And of course, it also has small contributions from Ivory Coast, Burkina Faso, and Cameroon. Nestle total asset at 899 billion. Nestle still has retained losses, but I kind of think that they might wipe this out as well. Worst case, first quarter of next year, I suspect they would be in better standing as well to post losses. So what have you observed? It kind of looks like there's a sweeping change going on. And I have a theory. My theory is that devaluation that happened last year and 2 years ago basically changed the entire economic landscape of Nigeria. It's changed completely because that has essentially leveled the playing field for everyone. So before now, you had a lot of companies that were having undue advantage because they could source FX very cheaply. So that is not happening anymore because everybody can now source FX from the same market. So think about it. If you're an importer, you go buy FX at 400 naira or something, and then even though black market is at 700 naira, and then you import stuff and then you compete with the local manufacturers here, you tend to always win, right? And that was not level and playing field. But now that, that arbitrage is gone, companies can now compete better. So it is now expensive to import stuff. So if you're importing stuff, you better be importing things that can compete better with what we have locally, because it kind of looks like a lot of the local players have quality products that are competing very well with foreign ones, because those foreign ones too are now expensive, because remember, you have to also pay, you have to basically import them at the same exchange rate. And so for the local players, they are also looking inwards, and their inputs is starting to change. I've spoken to a lot of them, and they tell me that, look, they're also looking and trying to mix how much of foreign products or foreign inputs that they rely on for their manufacturing process. And so that is also saving them a lot of FX potential cost. And so that has basically changed things. And so, because what's incredible is like these guys are all increasing prices, but they're still pushing volume. So as bad as things are, it kind of looks like Nigerians seems to be buying these things. I also think the strategy of going of sachetization might also be working for them, because that way you're seeing people can still afford to buy some of these things, even though prices are crazy expensive now. Sometimes this economy can just be a conundrum, I tell you. But that's what's going on with these companies, and we can see that reflecting in their numbers. They seem to be pushing inventories, they seem to be pushing volumes, they seem to be increasing prices, and that's reflecting in their revenue numbers. And that takes me to MTN. So MTN also released these numbers, and this one was mind-boggling, mind-blowing. MTN delivered a major earning rebounds in the second quarter of 2025, posting a pre-tax profit of 419.6 billion naira. And that compares to a loss of 179 billion naira the same period last year. Wait, I said Q2. In 3 months, MTN is doing 419 billion naira pre-tax profit. So basically, this company is doing about 120, 130 billion naira in 1 month in profits. I mean, let that sink. That's almost like 30 billion naira every week in profits. That's what MTN means. And going through the numbers, Q2 revenues alone was 1.3 trillion. And H1 revenues, that's half-year revenue. By the time you add Q1 and Q2, 2.4 trillion, up 54% year on year. Data revenue for the second quarter of the year. Now let that sink. Let me just calm down. So remember, I said Q2 revenue, they did 1.3 trillion. Inside that 1.3 trillion, data alone was 699.95 billion. So roughly 700 billion. So in the 1.3 trillion that MTN did, in the second quarter of this year, in 3 months, 700 billion of that, or approximately or specifically 699.9 billion, was on data alone. So MTN makes more money from data than from voice calls. It's just astonishing. What are you guys doing? Like, you guys are gobbling a whole lot of data and revenue. Data and calls is incredible. So Nigerians seem to spend a lot more on data these days. So what are we seeing? You guys are spending on beer. You guys are spending on chocolatey stuff. And you guys are also spending on data. Wow. Beer, chocolate, data. That is what is going on here. And that's what I can see. Like, the entire numbers here are just incredible. Incredible. So you guys are spending a whole lot on consumer stuff. In terms of voice revenue, MTN did 427 billion in that second quarter as well. So just to give you an idea of how data is now at the forefront of how MTN is making money. In terms of their subscriber base, 84.7 million subscribers, up 6.7%, which is quite a huge number in the period under review. Data subscribers for MTN is 51 million people. So 51 million data subscribers, giving them roughly 700 billion in 3 months. It is massive. In terms of capex, MTN's capex increased by 288% to 567 billion, and their free cash flow is 409 billion. That company is a massive cash printing machine. Incredible stuff. And we move on in terms of the balance sheet. Total asset is now 4.7 trillion. And MTN, for these solid numbers, basically catapulted to be the most capitalized stock on the Nigerian exchange, crossing that 10 trillion naira barrier during the week. So in terms of the stock that is the most capitalized in Nigeria is MTN. And by the way, if you're following ftm.ng, our blog, you bought MTN when we recommended MTN, you will be in the money right now, because MTN has gained 136% this year alone, and we've not even gone halfway in the year. Share price closed at 471 naira per share, up 130% year to date, like I mentioned earlier. Of course, their CEO said the reason why the company did so well is, one, price adjustments. Remember, NCC approved price increases for MTN, so that filtered well into their numbers. So price adjustment was very key for them. Resilient demand as well, because Nigerians just kept demanding for data. You guys are just guzzling data like it's water. And then effective cost control were one of the three. These were the three main reasons for the numbers that we're seeing. What a week. During the week, we also heard interesting news. I don't even know how that news flew under the radar. These guys really kept it very close to their chest, because I don't know how we didn't find out, because we tend to find out things like this at Nairametrics. But anyways, the entire market was shocked when we heard UAC had acquired Chivita Hollandia, which products made by Chi Ltd from Coca-Cola. Remember, Coca-Cola acquired this company some years ago, but it seems UAC has not acquired them, which is a major shakeup in the FMCG sector. It's not they've acquired them yet, but Coca-Cola announced that it has agreed to sell Chivita Hollandia, that's Chi Ltd, to UAC, and as they want to exit that segment of the market. I could remember years ago when they acquired Chi Ltd, it was strategic for them because it was competing with some of the products that Coca-Cola had, so it made sense for them to acquire it. But now they are basically spinning that off, and this has been what we've been seeing lately, though. We've been seeing a lot of this happen with a lot of the Western-based companies essentially selling some of their assets that they don't want to local players, and local players are milking it. You see that happen with Guinness. Guinness also major turnaround going on with Guinness, by the way. So Guinness numbers were also up. So back to my point about beer, Guinness also did pretty well. And so you're seeing UAC acquire this. So Hollandia brand is a very popular one. A lot of people know it. Chivita is also, probably one of the major leaders in the fruit juice market. So UAC is going to be old. And so why is it happening? Well, Coca-Cola said, this is part of their global strategy to focus on brands with high scalability and adopt an asset-light model. They just don't want to carry a lot of assets that they don't need. So one man's food is one man's poison, another man's food. And so UAC's picked this up. Of course, Coca-Cola announced recently a $1 billion investment in Nigeria over the next 5 years. Of course, it depends on how stable Nigerian economy is, and that's what they said. As for UAC has had massive turnaround. UAC is one of those turnaround stories that you got to be proud of, because I remember this company 10 years ago, they were basically struggling until they had that private equity investment that happened some years ago. And that turnaround has been slow, but it's been very effective and efficient. And you can see it in their numbers. They are basically turning that company around and going back to the old glory days of UAC. And that's what you're saying. It is a conglomerate that is very solid. 9 manufacturing facilities, numerous logistics hubs, 5,000 plus employees. The company seems well positioned to grow this Chi brand that they just acquired. They have also built solid distribution channels across Nigeria, so making it very easy for them to push some of those products. Credible story there in UAC, and no surprises, the share price gained 60% during the week. They were one of the major gainers during the week at 60%. Did I talk about major gainers and losers? I'm not sure I did, but maybe I'll get to that at some point. UAC gained 60%. Investors loved what they like. They loved that story a whole lot. And that was solid. Let's hear from their CEO. Their CEO, Fola Ayesimoju, that's the end group managing director of UAC, said the acquisition is a significant opportunity to build on the legacy of innovation and excellence at Chi, and they are thrilled to support the next phase of growth. He led that private equity investment into UAC some years ago, and he's the GMD of UAC executing stealth. That guy is clearly an executioner. Elko Weber, the MD of Chi, says we've built a market-leading brand and a fantastic team. With UAC support, the future is even brighter. So who were the advisors on the deal? Well, number of advisors on the deal. I don't want to talk about them. Not that interesting. But in terms of approval, they do need to get regulatory approval from the key regulatory bodies. But this has been a solid news for UAC. We're going to be watching this. We're going to be digging into those numbers to find out how much exactly is UAC going to be paying for this. We're going to find out. And I'm going to look at this compared to how much Coca-Cola bought Chi years ago. I'm interested to see what the dynamics look like now. All right. So in terms of gainers and losers during the week, losers, CNI leasing, 11.68% drop. Watch out for my interview with the MD of CNI leasing on the coffee table. I did speak to him recently and provided a lot of nuggets about the leasing business in Nigeria. NGX Group also dropped 12.28% during the week. Secure Electronic Tech dropped 13%. University Press dropped 13.7%. Lasaco Assurance dropped 14.75%. The Initiates dropped 14.76%. NACO, that looks like a buying opportunity. I'm going to be looking into NACO, dropped 15.13%. Cornerstone Insurance dropped 15.99%. FTN Cocoa, a lot to say about that stock, but dropped 20.3%. Abbey Mortgage Bank, surprisingly, dropped 34.13%. That obviously gets into my radar, because when a stock drops, is there an opportunity to see if you can buy? In terms of the gainers, Lafarge Africa up 19%. What's going on in Lafarge? They did drop their numbers as well. Solid results. I'm going to be talking about industrial stocks at some point. Solid numbers. But it appears that the Chinese acquisition of Lafarge majority shareholding could be pushing the stocks up to all-time high numbers. So watch out for this week and see how that pans out. Royal Exchange up 20%. MTN up 20% in 1 week. I mean, it's not all the time you get a trillion, like stock worth billions of dollars moving at 20% in 1 week. It doesn't happen like that. And MTN did gain that much. Wema Bank gained 20.10%, Multiverse 20.56%, Triple G 22.5%, Veritas Capital 23%, Custodian Investment, one of those stocks that were recommended on ftm.ng, also gained 27.87%. This stock has gained over 50% or so just in the last 3 months. And this year has been great for it. Micure, I'm going to speak into their CFO on the coffee table very soon as well. The stock gained 41.52%. Interesting things they're doing at Micure. I want to get into it and figure out what does this mean for you guys. Is there an opportunity here? We're going to be talking to the CEO or the CFO to get a better insight. And of course, topping the list of the gainers was UACN, as I mentioned, gaining 60.69%, making it top stock for the week. The best performing stock last week, UACN at 60.69%, of course, mostly due to the impressive numbers and the fact that they're going to be acquiring Chi Ltd from Coca-Cola. All right, so that rounds up the top 10 gainers for the week and effectively rounds up Follow the Money for the week. I hope that I've been able to give you insights into some of the best performing stocks last week and the companies that released their numbers. Of course, if you're not following this channel yet, you should follow it. Just hit that follow button and turn on your notifications. All we do here is point you to where the money is. That's it. Follow Nairametrics, follow the money. That's what we do. We don't play games here. This is a very serious channel, only for those who are looking to create wealth through information. Until we do this again next week, do have a profitable week ahead. Bye.